tell that. Frank's recording. I don't know if Branson's not recording just yet. I don't know if Branson is here yet. I know he said he had to pop in and then take off. He had some other stuff.
I like this.
Yeah. So you're recording my screen then?
Yep, and your voice.
Okay, that'll work. All right, I'll go ahead and get started. Okay, the question, and well, before I get started, I'm going to either ask Sam or Frank to share the recording to anybody that would like to have it.
Absolutely.
Okay, all righty.
Okay. No, I'm going to talk myself. Sorry, guys.
All right, Sam, we know how you are. Okay.
YouTube copyrights.
Yeah. Okay. I had a question today. How about day trading? Now, we all know what day trading is, do we or do we not? What is a day trade? What does it mean if you hear the word day trader? What is that?
You're going to buy and sell that same day, maximum next day.
Okay, very good. Buying and sell the exact same day, a particular option, stock, or what have you. That is a day trading.
How much?
Intraday, yeah, trading intraday. You're not holding it for days on days or weeks on weeks. You want to get in a position, you're going to get out of a position. Is there a difference between day trading and scalping? Some people will say no, but yes, there is. There is a difference between day trading and scalping, because scalping is just skimming right off the top. Scalping is getting in and getting out as quickly as possible. And if the trade goes against you in a scalp, you got to be out of that position. You got to be out of the position. Now, day trading, if it goes against you, and that's what I want to discuss and talk about tonight, how do you manage that particular day trade that goes against you? So I think on any trade, whether it's a day trade, a swing trade, a long-term trade, a scalp, whatever, you need to ask yourself a particular question. And actually, you got to ask yourself two questions. What are those two questions that you should ask yourself? First question, how much money do I want to make off of the trade? How much do I want to make off the trade? Second, how much money do I want to lose? Now, when you ask yourself that question, that can actually be a two-part question. How much do you want to lose? That can consist of the overall total amount that you want to put into the trade, as well as an overall amount that you actually want to lose before you stop out of a trade. Now, I myself, typically, how many times do I stop out of a trade? Very rarely. Rarely. Because I'm typically, I don't put anything more in a trade than I'm willing to lose 100%. Is that a good strategy? Yay and nay. But you should ask yourself those questions though. How much do I want to make? How much am I willing to put into the trade? And how much am I willing to lose before I actually stop out of the trade? So with that, I day traded the SPY today. Now, we all trade the SPY. We've all traded the SPY in the past. But typically when we're trading, basically what do we do when we make a trade? Sam, when you make a trade, what do you typically do?
I look at the chart and see what's going on with it.
Okay. What else?
See where it is on support or resistant.
Okay. What else?
How much I want to put in.
You don't ever think that. Okay.
I think that's it.
Okay. Okay. Anybody else want to throw? I mean, when somebody makes a day trade or a trade, what goes through their mind?
Entry and exit.
an entry and an exit point. You got to know your entry and your exit point. And typically, your entry and your exit point is basically based off of support and resistance.
That's what I said.
Or I know exactly. I want other people to, chime in as well.
Okay.
But in addition to the support and the resistance, it's the overall profit that you want to make, because your profit may or may not be at a resistance point. And we all know how options work. It can shoot up and hit a resistance point, and it looks like you get filled only to fail and get pulled back, and you just dropped 10, 15 cents on an option on the SPY. Now, granted, the spread on the SPY is typically 2 to 3 cents. Sometimes it's a penny spread, which is good, but they can move up and down pretty quick. Now, today, this is the SPY chart. This is today's and yesterday's. Okay. Now, I've tweaked the channel already because I traded this thing today, and I had to. And I showed Catherine. Now, but basically, what we had was the channel from yesterday. Let me get rid of this particular channel. And the channel that we had yesterday, I'm not going to draw the exact channel, but right here was the trend line. And Catherine can probably validate this today because she watched it, I believe. This was our 3-minute channel that we had. And it was based off of yesterday. And you can see how it all lines up. Now, today is right here. Right there is today's candle. So I'm going to put a line right here. So this was yesterday, and this is today. Okay? So based on that channel, I said I'm going to make a day trade. Okay? It came down to the support. We had ourselves a little spinning top candle right there, and that's a reversal candle. I said I'm going to get in. And when I'm trading the SPY, I'm looking for $25 to $50 on the trade on a single contract. And it's, a lot of people will trade single contracts. Now, granted, you can go in bigger, and I'll get to that in a little bit. But I took one contract. I forget what I paid for it. $3 is what I wanted to pay for it, and I got filled at $2.98. I had a sell order in at $3.50. At $3.50. $3.50 would put me up around this level right here on that green candle. As you can see, I got in, and it looked pretty good. Okay, I'm going to make my $50. Easy trade. It failed the channel. What do? Do you stop out? Or do you throw more money at it? Well, since this is a day trade, and one thing that I didn't go over, I'll go over now. Another thing that you got to look at is when you're day trading options, you got to take a look at the expiration days. I know a lot of people like to trade current day or current week's expiration on the SPY. Of course, the SPY has Monday, Wednesday, Friday expirations. When I look to trade the SPY, lately I go 5 expirations out. Just so happens this one here was July 17th. I don't like trading SPY monthlies, so I backed it up one, only went out 4, and I traded 7/15. That gives you time, if it goes against you, to work the trade to where it goes against, or to where you can get it with you, or to get it to go along your way, because what goes down must come up. What goes up has got to come down. Typically, when I'm trading the SPY, I will put in up to 10 to 15 contracts total. And sometimes I'll go with the contract, sometimes I'll go with the dollar value. 10 contracts on this particular trade was $3,000. You can cut that back to whatever you want to.
Can I ask a question?
Yes.
When let's say it may be different for the SPY because it has 3 expirations per week.
Mm-hmm.
But number one, do you choose in the money, near the money, or at the money strikes when you place a trade? And you do a minimum of 10 days out, or 10 to 15 days, or what is, like, for something that expires once a week on Fridays, do you do that different than you do the SPY because the SPY has 3 expirations?
Very good questions there. And for the expirations, if I'm trading a normal chart that has Friday expirations, I'm always trading the following Fridays. Every now and then, if I'm doing it on a Monday, I will trade current weeks. But majority of the time, 9 out of 10 times, it will be the following weeks at least, because that gives you time on your side, and it also lets that option move up in value while retaining as much time value, because the options are comprised of time value and intrinsic value. You want time on your side. Now, there are sometimes, instead of doing the following week, I will go 3 weeks. Exactly right, Daniel. The volatility right now. So, but what I try to stress and put out is, how many of us wants to get the exact high and the exact low on an option? How many people want that? They want the best possible entry and they want the best possible exit.
Everybody, but you're going to have to settle for something else.
Exactly. Everybody wants that. I mean, we all want that. And it's a hard habit to break. It's a hard habit to break, really. But the thing is, instead of shooting for the moon on every one of these trades and what have you, I can guarantee you will get lucky enough to be in a particular trade at some point that will shoot the moon for you. If you hold something overnight, that trade will gap up enough to, wow, I couldn't believe this. But as far as the particular day trading, no, you're not shooting for the moon. You're shooting for a particular profit. The way I do it, I'm looking for $50, pretty much. Anywhere from $50 to $100. Now, this varies based on, like Daniel said, the volatility and actually the overall movement. Because, even though there's charts we're moving, and I know we can get more than $50 or more than $75 or more than $100. How many times have you all heard me tell Trini, change your sell order? We can get more than 50. We're going to take 75 or we're going to take 100. And we typically do, because we have time on our side, for one. And then we have, entries on our support level. But on this particular trade, I wanted to make $50. I took one contract. It failed to support. Knowing that I've got time on my side, I waited for a bounce. That green candle right there, I had a support line pretty much right here. I mean, it came down close to my support. I said, I'm going to buy another option. So I got my average down. I got filled the first time at $2.98. I filled the second time at $2 and I want to say 60 cents. So my average, $2.80. But yet my overall goal still stayed the same. I'm still looking for $50. But now I've got 2 contracts. My average is $2.80. This thing's dropping. And I'm thinking, you know what? I just want to get out, so I'm going to sell at $3.05. $3.05 will get me out with $50 because my average is $2.80. That's 25 cents per. Times 2 is 50. $3.05. Well, it failed again. Thinking, oh my goodness. Okay, that's all right. It's coming down. I bought another one on a 60-minute support because I knew we had the 60-minute support. I got another. I got my average down to $2.60. I paid $2.25, I think, for the last one. So now I got my average down to $2.60. I got 3 contracts. So now I still want to make my $50 because I just want the SPY to bounce and so I can get out. Because this is my day trade. This is what I really wanted to make, was $50, even though I got more into it. And knowing the market, how it is trading, how it's been trading for the past several months, up and down, up and down, up and down, a lot of volatility. It could go up as well as it can go down or what have you. So I just want to get out and look for another trade. So I got in, got the average, maintained, and I only wanted to buy 3 times today. 1 contract each. Because even though I want to trade up to 10, 15 contracts, I've got 5 expiration days to go through before I can actually have to get rid of them. I don't know what's going to happen, but I'm still content making my $50. I'm not throwing everything into it at one time just to get out. I've done that and I've lost trading that way. You don't want to do that. So what I figured, well, okay, got my contracts. I'm just going to sit it out and I'm going to wait. Of course, today it did sell. It actually sold going into this consolidation right here. Now, granted, had I held on to it, I could have made more money if I sold it up here. But was that my trade plan? No. And this is what you always have to look at. What is your trade plan? What is it that you want to do? And once you achieve that target, time to get rid of it. Because how many times have we been into a trade? Let's just assume that we was trading yesterday's. Okay? Let's do this right here. This here is yesterday's channel. And we bought right here. No, let's just say we bought right here at a confirmation on that channel. We knew this was a good channel, okay? We got in. And it hit 317. You know what? This thing's going on up tomorrow. And I'm up $300. Still holding your options. Are you up $300 today? Nope. Nope, you're not up $300 today. You're down. So you had that profit taken away from you. Now you might be up $50, $100 maybe. But if you're consistent in planning that trade, and the main part of the consistency is trading the plan. Most everybody in here has heard me say at one time or another, small gains equals what?
Big accounts.
Big accounts. Big accounts. Small gains equals big accounts. And if you take that small gain consistently, now it's not going to work out every 100% of the time, 100% of the time. But if you don't throw everything at it at one time, a lot of the selling the puts and the selling the covered calls, the member that's doing that, they hear the thing or the phrase of scaling in, scaling out. Scale in, scale out. Same way from some of your day trades. Now, if your goal on a day trade is to make $500, well, you need to figure out how much do you want to put into it to make $500. Because, yeah, we could figure out something to make $500 on a particular trade, but you're going to have a lot of money to put into it, especially in this volatile market, this news-driven market. But 2 key things: if you buy on support, sell into resistance, you can make the money, you can profit. And on this chart, I bought on support. It failed. I found a resistance, but I hadn't made my profit at this resistance. So I went, that's why I put this next resistance line up here, and I sold into that resistance. because I could get my profit out. Because you can see it hit resistance right there on that green candle, pulled back. Right there was an entry to get back in if I wanted to, because I had 1, 2, 3 red inside that green. When you see that pattern set up, chances are your next candle is going to be green and it's bullish and it's going to make an up move, which it did. And then it made a higher low and then just kept on higher. Consolidation, but still made higher. We still got ourselves a higher, just eyeballing it, looks like it's a double marker, or I mean a double bottom here. I'll get the exacts. But part of your day trading, if your trade is going with you, not against you. See, my trade went against me right off the bat because I bought on that support and it failed support. But if you're buying on support and your trade is going with you, instead of taking your $50, you can add on these supports the same way as you're adding on your way down, averaging down. You average up. You average up. There you go, Jake, or Daniel. You're exactly right. You want to trade between support and resistance. Make sure that target, your $500 profit, does not have to pass a resistance marker, because resistance is going to hold just like support, or it's going to fail just like support. But I know a lot of traders, I've been in contact with a lot over the years. I mean, they've got illusions of grandeur and they want to make 100% on every single trade. And they want to make as much money as they can on every single trade. And that's what causes a lot of losing trades, is shooting for the moon. So now, based on that right there, would you rather average up or average down? Or would you rather just take your profit?
Take my profit.
Take your profit, exactly. Now, if I'm accumulating shares, yeah, I'll average up. We're doing a Sigmo trade for 12 months. Yeah, I'll average up. I'd much rather average up on that type of a trade than an average down. And that's something to think about and remember as well. What works for one type of a trade will not work for another type of a trade. There's a good time to average down, a good time to average up. There's a good time to stop out. There's a good time to let it run. But I myself, typically, I take the profit that I'm looking for. Also with these supports and resistance. That was yesterday's channel. Even though we failed that channel, what you can do, tweak the channel a little bit. And this is what I did today. And somebody said, oh, I didn't know you could do that. Sure, sure. Because currently, you see the center line right here, and you see the solid line right here. Well, you can tweak this channel, activate that drawing, and what you're going to do is basically move that center line to where that solid line is, which is the bottom of the channel. Oh, phooey. It might be close, I don't know. Now I've messed it. Let me just start that again. Typically, you can just grab the corner and redraw it, but let me remove that. Let me put that channel on there from yesterday. It was this right here. Redraw. Okay, that there's pretty close right there. Okay, if that's your channel there, if you activate that, Why is that doing that, Catherine? It's supposed to drag right on down. It's doing it there.
Oh, you know, it'd be nice if I unmuted myself.
Yeah, it would.
Where's your reference point?
Well, I had them right there on the corner.
No, where do you want the chart to be is what I'm saying.
I'm going to drag it down to the bottom point like I did earlier today to get our new channel.
Okay, so you can activate it
Yeah, that's what I did.
and take
It's wanting to turn it. See?
because you're take the second, take it, pull it down to. Hold on, let me just try something because I should have that same.
Well, it normally doesn't do that though. I've never had an issue with that.
Hold on a second, let me try something.
Well, I do it all the time.
Do you have the snap to open, high, low, close?
Oh yeah. Mm-hmm. Yep.
Okay, so let's take that. What do you got? A 3 minute?
Yep. 3 minute one day.
3 minute.
Let me try something I know what I'm going to do. Let's do it this way. Should work out the same way. Close.
Oh, I forgot I deleted that channel.
No, that ain't going to do it because that's not my channel. Because I got in up here. I got to go from the bottom. But let me try it this way. Yeah, see there? See what happens when you drag your channel, just redraw your channel. And if you make the center line to where your solid line was, that'll give you your new target to the downside. So play with your channels, work with your channels if it fails. Because all the time, here we go. Okay, that was the original channel because I got in on that support and we failed it. Now, if you activate that, well. Y'all get the idea though.
Take it from the second dot and see if
I
that'll
did.
work.
It
Oh,
won't do it.
I don't know why.
Yeah, I don't know why, but typically it'll automatically go ahead and do it.
Yeah,
I mean,
something's
this was
going
the
on.
first time I've had issues with it. So, but anyways, what I did is I redrew the channel to where the center line is now where the solid line was. Now, you could also do it this way. Well, there's your top, but no, you can't either because if you did that and redraw, you have no idea where to put your bottom to grab something. I mean, you can do it that way right there right now and it catches it. But typically when you have a channel and it fails to the downside, after it makes an initial bounce, activate your drawing, move the channel down to where the center line becomes the bottom channel. And that will give you your target to the downside. And again, like I said, normally think or swim, doing that, I've never had an issue with it.
Yeah,
But
mine's
tonight, for
working.
some
I
reason,
don't know. Yeah, I don't
yeah,
know.
for some reason it's doing it, and I don't know why, but it's okay. Now you can also, use your 60-minute supports and your 15-minute supports in your day trading as well, because those are valid no matter what time frame. So, but the main thing on the day trading I wanted to get out tonight is, you need to have a couple of things in your head. How much you want to make on a trade? Is it going to be a true day trade? What are you going to do if it goes against you? Are you going to hold it overnight? Or are you going to stop out? How much you want to put into the trade? don't put every bit of it in there at one time, because you might find yourself in a position to where, I'm stuck. I can't average down if this thing goes down against me. So typically on day trading, I will trade off of a 3-minute chart. I will trade a 3-minute chart. Same with scalping. But I'll also use the overall trend from a 60-minute as well as that daily chart too. And based on, why I took that trade today is because, it had traded in that channel. I traded it yesterday. So why wouldn't that channel still be valid? But there's a prime example of channels fail. What do? There's no need to freak out. There's no need to, you just adjust your plan accordingly, adjust the trade. Now, could have I got in and then averaged down everything I had on that second support? Yeah, but you know what? It dropped further. I still would have had a high average. Instead of getting out into that resistance, I would probably had to wait until I got out, up into this area. Still would have worked out, but again, I want out. I want to go ahead and get my profit so I can take another trade to get another trade in there. Now, I know a lot of people, today was a slow day for me. I didn't make that many trades. How many trades did I make, Frank?
Probably made about 12, right?
Today I made 18.
18. Yeah, I wasn't even in the room most of the day either. You probably
Exactly.
told before I left.
Right. So 18 day trades.
Yeah. 18
day trades. And if you calculate $25 to $50, $50 is the average. Yeah, that's $900. Not too bad on a day when the market's down 360.
That's right.
Some days I'll make 30, 40. Now, one thing that you have to also understand and remember also is if your account is a margin account and you have less than $25,000, you can only do 3 day trades in a 5-day period. That means you can buy and sell today, buy and sell tomorrow, buy and sell Monday. You can't trade no more until Thursday when the one drops off, and then you can only make 1 trade. Now, if you have over 25,000, you can buy and sell as many times as you want to in a day. If you have a cash account, as long as you have settled funds, you can trade as many times as you want. But just on the margin accounts, if you have a margin account, you can only do 3 day trades in a 5-day rolling period. Now, if you make that 4th day trade, used to be certain brokers, I know E-Trade, they will give you a forgiveness. They'll forgive you. You made an honest mistake. I've been forgiven from E-Trade, I don't know how many times. When I first started trading, Tastyworks. Now, E-Trade will forgive you once in a 12-month period. Tastyworks will forgive you 5 times in a 12-month period on the same account. That's why it's good to trade multiple accounts if you're going to day trade. That way, you can trade more than 3 times in a 5-day period. Anybody got any questions?
Well, as long as you're going to move on to the, because I'm just letting you know what I have.
Uh-huh.
Or I just put down day trading rules.
Okay.
So, of course, have a trade plan.
Yep.
10% profit is a good target.
Oh, okay. Yeah, we didn't even talk about that.
Okay.
The percentage profit. Okay, I'm glad you brought that up, Catherine, because I know we discussed this a little bit in chat today. A lot of people, they're looking for a percentage, and they want a 100% win. We all want 100% wins. Do we get them all the time? No. Will you get them? Yeah. Yeah. Nothing wrong with them. And and you will get those. But is that the goal every single trade? If it is, I mean, I'm not going to say it's not possible, but you're doing a little bit more than day trading, because day trading is not 100%. If you get 100% on a day trade, you're getting lucky, because day trading is buying on support, selling into resistance. And if you're buying on a support, selling into a resistance, that is not 100% trade right there. You're not going to get 100%. Now, can you get 100% on this trade if you're buying it today and holding it for 2 or 3 days and letting this thing go up 3 days in a row? Yes. That's a 100% trade. Nothing wrong with that. But day trading, you don't get 100% on your trades. Now, Catherine mentioned 10%. 10% is a good day trading percentage. That's why I don't look for a percentage. I don't look for a percentage. Sometimes it's 10%, sometimes it's less. As a matter of fact, the $50, if I'm buying the SPY paying $200 for an option and I'm making 50%, well, how much is that? That's more than 10%. But if I have to put $1,000 into it and I only make 50%, that's less than 10%.
You mean $50?
Yeah, that's what I meant. $50, not 50%. Yeah. If I want to make $50 and I've got $1,000 in it, yeah, I'm only making 5%. So, but my goal is not on the percentage side. My goal is the dollar side, because the dollar side is what adds up. But 10%, that's a decent goal. And that's what you've got to take a look at. And if you notice, a lot of my day trades are late in the day, because I want that channel to develop, and I'm watching a particular channel, and I'm watching, okay, how much does this option move if it goes from this support level? If I get this support level, how much did that option move in that run right there? Because that particular run, we went from a low of 312.76 to a high of 314.94. So a $2 move on that particular run. Okay. If I'm getting in late in the day and I'm getting in on this support area, because that was the bottom of the channel, from this low, which is 313.83, to this high, 315.85, that's a $2 run. Same run that we had right here. How much did the options move right here? If it moved 50 cents, 60 cents, and typically early in the day like this, it'll probably move 60, 70 cents. Late in the day, it's going to get another 50, 60 cents on a support level if it makes that $2 run. That's why I took it off of the support, but it just failed. It failed that one. Then you got to adjust, of course. But typically, watch. I mean, even right here at open, the low at the open was 314.21. The high was 316. $2 run. You got a 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 $2 run. How much is that SPY going to run in $2 based off of your particular expiration? Because The expiration that I'm looking at is going to be different than one that Sam's looking at. Which one's going to move more? Today's expiration or tomorrow's expiration or next week's expiration?
Tomorrow.
I'm sorry?
Tomorrow.
Yeah, the longer term one, you're going to have more of a chance of it moving. I mean, because what's going to happen, these little red candles is going to affect the shorter term expiration. I call those premium killers. Even though, you know, and you might get same, more. It all depends on the volatility and the volume, of course. But I like the sure thing or more of a sure thing because when you're trading, it's a 50-50 gamble. Somebody's going to bet right. Somebody's going to bet wrong. I like to try to get mine to where I've got the odds in my favor. So, and that's why I'm not looking for the moon each time I do a day trade on any chart. I'm looking for how much did that make that initial move? How much did we pull back? Now, from this high, 316, down to this low, 312, that's $4. So we gave up the $2. We pulled back, but then we went right back. 50% move from that initial bounce is a dead cat bounce. Find your support levels, buy it on that support, get that $2 move, take your trade, take the profit. And I guess overall, what I want to put out is take your profit when you see it. Take your profit when you see it, because like I said before, how many times have we had profit and watch it all slip away?
Oh, yeah.
I've been there, done that. Been there, done that. I mean, I'd be up $1,000 and, oh, okay, I'm still up 800. I think it's still going to go up. No, I'm down a little bit more, but no, it's going to come back. And all of a sudden, well, you know, I'm down $800. Well, I think it's going to bounce. Let me throw some money into it. It don't bounce. Because I threw too much money into it. Yeah, I'm only down $200 now. I'm going to make it all back. End up losing every bit of it. Been there, done that. Okay, Catherine, go back over your list there if you don't mind. See if we hit them all.
Okay. Your strike. You're buying at least 10 days out. So if you're buying the something like the SPY, which has 3 expirations, you want to give yourself 10 days.
Correct, at least.
If you're trading just regular expiration, if it's Monday, you can buy that week. If it's Tuesday through Friday, you buy the following week.
That is correct.
Or 2 weeks out.
Correct.
And no monthlies. I know you said no monthlies with the SPY.
Yeah, I don't like trading monthlies on the SPY or the DIA because I trade the DIA as well. But I do not like trading the monthlies for whatever reason. I'd rather stick with those weeklies or those non-traditionals.
Okay.
Now that's only on the ETFs.
Yeah, that's only
Yeah. Okay.
Have a profit target.
Yep.
Number one, you have a maximum of 3 buys per trade. So
I'd like to stick with that. Yes.
Yeah. So that's a maximum of 3, unless, yeah, of course, if something crazy is going on, something special, then that may change. But
correct.
Your first buy, you have your profit target. If that profit target is hit, you don't have any more buys and you get out of the trade.
Correct.
If you do not get your profit target and it loses a support or doesn't get through a resistance, then you might have a second buy once it gets past it and retest it, or and then bounces up. Like if it goes down to a support, if it loses support and then comes back up to a support and bounces and moves positive, you may make a second buy, or you're buying on next support or resistance. And then your third buy, if you're still holding at the end of the day, the next day you will buy on the way up if it's moving in your favor. Does that sound about right?
That sounds about right. Yes. The 3 buys for the initial day. Yeah. I typically try not to, get in too deep on the initial if it goes against me. because, you know, I'll buy at least 3 times, or I'll average down at least twice, but I'm only buying 1 contract at a time. So the first day, if I have to hold this overnight, I will end the day with 3 contracts. The next day, are we bouncing up or are we still gapping down? I will wait for that major support, and then I will buy 2 contracts. That gives me up 5 contracts now. I've got a lower average, and I'm still looking. In this particular case, I'm looking for 10 cents per contract because I've got 5 of them. And if I get that 10-cent move, I'm getting out, because chances are if the stock, if it's moving down, you're going to get these bounces. You may or may not get that bounce high enough to be able to get out of your position, but you have to wait for that support level. So a key support level would be a 60-minute, a daily, a weekly. If it hits one of those lines, I'm buying. Now, if the second day I've bought 2 on that first support and we failed it, well, I got to buy 2 more. So on that next support. So now I'm up to 7 contracts. If I have to buy again, I've got 9 contracts. So now I've got a lot of money tied up in this. But for the most part, you're typically getting out if you're still sticking to that $50 profit or your initial profit, because on bounces, you should be able to get out. But if you don't, now you've got 9 contracts. What are you going to do?
So
Well,
in other words, you're making your second and third buys to try to get your average down. So when it does bounce, you can get out.
exactly. And that's the goal whenever you're doing an average down, is just to get out. And I know some people, and they say, forget that $50. I want out for even. If I see even, I'm getting out. Nothing wrong with that. Nothing wrong with that. But at some point, options, they expire. That's why you got time against you. That's why I go out those 10 days on the SPY. The first 2 or 3 days, time is still on my side. I need to try to get out within, you know, if I've gotten into a day trade and it's turned into a swing trade, 3-day trade, I messed up big time. So you got to make a decision. How much do you actually want to put more into it? Now, think, I will trade up to 10, 15 contracts in general on this type of a trade. I've got 9 right now. I can buy 6 more. Is the daily chart on that SPY looking like it's going to bounce? If it is, I'll hold it just in case. But I'm still willing to lose every bit of the money that I've got into those 9 contracts. Not that I want to, but I either sell it for a loss or just wait for a bounce and see if it comes back up. And that's where a lot of people, and the majority of people, this is what we have different tolerances. The tolerance level that I've got is going to be different than what Frank has, what Catherine has, what Branson has, or what, you know, anybody has, what Ron has, Sam. So it's up to an individual person. How much do you want to lose? And I know there for a while, I was asking Sam whenever he asked me about a trade. I said, well, how much do you want to lose? But that's the question you have to ask yourself, is how much do you want to lose? But you got to also ask, how much do you want to make too? Because does anybody have any idea where the SPY is going to go at tomorrow? Anybody got a crystal ball that can tell us? We got a 50-50 shot saying it's going to go up. We got a 50-50 shot saying it's going to go down.
No, tomorrow by close, it's probably going to hit around 317 or 318. Most likely.
Okay, there's Sam. Okay, so Sam's bullish. So, you know, he's going to hang on to those calls that he took that day trade on. But if you catch yourself into a day trade turned south, you need to do some quick math and some quick, you know, because I've seen too many people blow an account. I've seen so many people start over on their accounts. Nothing wrong with it. But, you know, how do you eliminate that? How do I stop from having to start an account again? Sound trading principles, in my opinion. Support and resistance, two of the key things. You cannot go wrong buying on support, selling into resistance. You can't go wrong. Because if you buy on support and you sell into resistance, I guarantee you got profit. It may not be as much as you actually want, but yet that's when, if you're watching a chart early in the day and you take the trade later in the day, or if you take the trade right at open and this thing moves up $2, don't expect it to keep running, because here's a prime example. Let's just say you bought in right here. I'm going to throw some fictitious numbers out here. We bought this call at $2. We ran up. You know what? It's still running. I'm up to $3 right now. Oh, well, it's pulling back. I'm down to $2.90. Oh, we got a green candle. I'm back up to $2.92. Oh, I'm back down. Oh, here's a real good green candle. It looks really good. I'm back up to $3.05. It's going to keep on going. Then that big wick, we got a red candle. You're back down to $2.75, $2.60. Oh, we're back up $2.75. That's a reversal candle. I think we're going to get back up to $3.05. I'm going to hold out $2.75. Oh, I'm down to $2.50. Oh, down here, you're down to 75 cents. Man, I wished I would have sold it at $3. How many people's done that? I've done that. That's why, if you're trading, have an idea of what you want to make going into it. Get in, get out. There's always a trade, always a trade. Yeah, I got in at $2. I got out at $2.50. Yep, it ran to $3. But guess what? I'm buying again back here at 75. Well, this person's still in it. He paid $2. I'm in at 75. I'm selling here at $1.25. He's still waiting to break even. So I've made two trades, made $100. Oh, he's getting back close to even. Oh, we pulled back here. I'm going to take another $50 here. Oh, over here, I'm going to take another 50. I've traded this thing 4 or 5 times. I've made $200. Oh, here we go. He's still holding overnight. He gapped up. He can sell it at $3.50. So he made $1.50. I mean, sometimes it works out. Sometimes it don't. But be consistent and wait for those support and resistance. That's why you'll see me throughout the day adjusting intraday support and resistance levels. Because I'm doing that if I'm in a trade or I'm looking to get into a trade. Because I got to know those support and I got to know those resistance, and I got to try to, you know, get as close as I can, but it's not going to be the exact. So, but don't think it's going to go straight to the moon, which it may at some point. But for the most part, get in, get out. If you see it running, even on a chart that's running, Amazon. Chart's been running. I mean, here's our Amazon's 3-minute chart yesterday. Even though it's running, get in on a red candle at a support level and then get back out. Left a lot of money on the table on Amazon yesterday. But when I'm day trading, I will leave more on the table than I take off. Okay. Ron, good question. Besides the SPY and the DIA, those are the two main ETFs that I'll day trade. But recently, I've day traded AMD. I've day traded Amazon, Apple, NVIDIA, UCO, Roku, and I've even day traded Beyond. Those are some of the most recent ones. Now, day trading options, like today, for example, my day trade on Roku. Yes, I've got Roku. As a matter of fact, several of us have Roku common stock. And yep, you've got commons. Sam's Power of 3 account, you can see from trade 68 to trade 100, his last 32 trades have been on Roku except for one, AMD. Roku has been phenomenal. And when you have a $16 day, that's fantastic. Now, the way I've been day trading, you're probably going to say you're crazy. But typically, when you're day trading, you're buying something. I mean, you're buying calls. You're buying calls. But guess what? You can also day trade those puts. And that's what I was doing today. I was selling to open puts, collect X amount of dollars up front. People pay me to force me to buy those shares. As that thing runs up, sorry, I changed my mind. I'm going to give you back. You gave me $1,000. I'm going to give you back $200 because I changed my mind. I'm going to keep $800. So that's how I day trade Roku puts like that. And that's the way I day trade beyond time to time. Because you want to sell to open. Sell to open those puts. Take your profits up front. And then set whatever profit target that you want, whether it's $50, $100, $200, $800 on Roku. Roku's a $500 trade every time you trade it, just about. On options.
That much, huh?
Oh yeah. Yeah, Roku's a good chart to trade on options.
Well, how much do you put in? Because, you know.
Very good question. Now, the way I've been trading Roku, like you said, I sell the puts. Because when you sell the puts, you're obligating yourself to buy the shares. So like today on Roku, I sold, I'd have to look them back up. If, you know, the chart, this is a 3-minute chart. Let's go to the daily. I mean, that's a nice candle on the daily. We broke out of our down channel. Let's go ahead and stop recording if you want to. I don't know how long that will get because this is not day trading. Well, yeah, no. Go ahead and leave it going. Leave it going. Yeah.
I got like 2 more things with the, you know, just.
Okay, well, let's leave it going then, and we'll throw them in there. But how much do you day trade with on Roku? If you're buying the options, yeah, you're using your own money. But if you're selling the puts, like for example, if you sell the 140 puts, you have to have $14,000. They're holding $14,000. But if you sold a 140 put, it's going to expire worthless anyways. And currently, like on Roku, a 140 put for this week is $36. At open, you could have gotten $4.50 for it, $5. So it's going to expire worthless. So that's free money. I mean, I'm willing to buy a Roku at $140 anyways. But what I would do is what I did today. I'd sell some 140 puts, 145 puts. As the stock was moving up, if I'd collect $300-400, I'm buying it back after I made $100. So you trade Roku 3 or 4 times like that today, you got $300-400 just on that. And you're willing to buy the shares anyways. So sell the put. Collect your profit up front. Let that nice big run. Let it expire worthless if you want to. Now, on the flip side, day trading, this is a little bit harder. I know you've got commons, Daniel. You can sell calls, but you can't really day trade covered calls the way you can on those puts. Because when you sell a call and the price keeps moving up, the price of the call keeps going up too. When you sell a covered call against your position, your profit is capped. So you can't get no more unless you get a big drop in the price, and then you could buy it back then. But I never buy back a covered call once I sell it. Never buy back a covered call once I sell it. I will buy back a put if I've sold it, if I've made profit, and if I change my mind about owning the shares. So, okay, 2 more things or 3 more things, Catherine, on the day trading.
Yeah. Which contracts do you buy in the money, at the money, near the money?
Okay, most of them are at the money when I'm doing the SPY. Typically, like if the SPY is trading at 315.50, I'm buying the 316 calls. Every now and then I'll buy the 315, the one that's already in the money, because I'm trying to capitalize on that intrinsic value move as well as the time. Now on the AMD or a lot of the common stocks that I'm trading, it is typically AMD is in the money. Apple and Nvidia is typically 2 strikes out, just because of the price of the options.
Apple and
Apple and Nvidia, 2 strikes out. A $50 stock such as AMD is an in the money call. You're going to pay a little bit more for it, but it's going to protect you. I traded the $52 calls today. Of course, we opened up at around 53 something, I believe. So they was already in the money. Yeah, and they ran up nicely.
Okay. This is the last thing. Well, for me, for this right here, because
okay. Well,
sorry, I'm not hogging it. If you guys have questions, please chime in. I don't want to, seem like I'm hogging it. I haven't waited.
No, you're fine. You're fine. We got some good questions out here so far.
Dan, Catherine?
Hey, Branson, are you just now starting to record? You've missed it.
I just got in and I missed it.
Okay, that's all right. I tell you what, we had 2 other people record it, and they're going to send it to you.
Thank you.
Or actually, they're going to send it to me, and then I'll send it to you.
Okay.
Okay?
Appreciate it.
Hey, not a problem. So you can stop your recording if you want to.
Okay.
Okay. Okay, Catherine, go ahead and continue. I'm sorry.
Okay, you said you like to get in on a red candle. Now, you normally when you're intraday trading, you're watching 3-minute chart.
Yes.
Do you wait to see, like, for instance, if it's 2 o'clock and a new candle just started, do you wait till almost like 2:03 and the candle's still red and you know it's going to close red, so you'll buy then?
If it's on a support.
If it's on a support, okay.
If it's on a support and coming to the support, you want to buy on that red candle because that is your better entry.
Okay.
Because support is going to hold or it's going to fail. If it holds, then that thing's going to go green and you got the better entry on the red candle versus that green candle. But I will try to wait until at or near the close of the candle. At or close the near the candle. So if the candle just opens up, if it's 2 o'clock and we've still got 10 cents to support level, depending on the chart again, because each chart may they got different spreads, they've got different algorithms, I guess. But I will wait as close to the support, but it might not be exactly on that support. As you saw on that SPY chart today, I got in, it was close enough because you got to think for me, let's see, let me go. This is today's chart. Let's think, because if I'm not mistaken, our trend line was something like this right here. Okay. And knowing how the SPY trades, I got in on this red candle right here because it was close enough to that trend line for me. And knowing how, the SPY jumps around a lot, I just went ahead and took it. Now, a lot of times you want to bid sit. For example, you know what? You can calculate and guesstimate where it's going to be at and just hope you get filled. That's, I got $3. Actually, I wanted to get $3 and it was red and it filled me at $2.98. That was pretty good. So it pretty much filled me at the low of that candle. Even though it dropped down to $2.95, I don't care. I'm close enough to that support level there for that bounce. But in this particular case, it did not bounce high enough to get me out of the trade initially. And that's why I had to wait for a support level, average down, and then another one. So, but yeah, red candles. And I know, Sam, I'm going to pick on you again. Sam's afraid of red candles. Used to be afraid of red candles. But now, it doesn't seem to bother him. So, but, he always wanted to wait for a green candle. I say, if you wait on a green candle, if you're being bullish, you're going to miss the trade. You buy it on a red candle. You buy it on a red candle. Now, here's one. If this is the support and you got this candle right here, let's just say, you got down here, somebody missed the entry right here. It comes back up and we're going to form a W. Is that red candle right there an entry spot? I mean, here, this candle, it come down to support. Would you get in on that candle right there?
Well, it didn't close at that point.
Exactly. And that's what I wanted to get at. No, it did not close. You got to wait for candle closes. As long as it's going to close above a support level, that's where you want to get in. And as long as it closes above, at, or near that support level, that's your entry. Support's going to hold or fail. This here is a complete failure of that support. And I knew I was going to have to average down when it got up to that green candle and the price only went up to $3.15, I believe. I said, okay. When I saw that candle, I said, I'm going to have to average down. So I got in my head real quick. Well, if I average down, I get down to 280. I got to buy it at 260. So when it came down here, now in this particular case, I did buy, I got filled on that green candle. Looking at it, okay, that's a possible reversal. The next candle was a possible reversal because of the big long wick. We made a higher close because the close is higher than that one there. But then when I saw that one right there, I go, nope, we're going to drop on some more. So then I had to wait down to the 60-minute candle. When I saw that price, I said, okay, I get one more today. I waited and I got in on this yellow line, but I did wait a little bit until it came back above it. Even though it failed it here, it came back up. I did wait on that green candle, and then I said, I'm done. I got 3 buys. I got to wait it out. Just so happened, I don't know if Trump tweeted something or if news came out or what, but we got the reversal, and I did get out on that green candle right there. But to summarize, basically, you don't go all in. Don't go all in on a trade. Don't put everything you got. Don't put your whole nest egg. Don't put the whole account in there. Scale it in. Be satisfied if you buy one contract and you take your $50 or whatever your profit is. Be satisfied with that because there's always a trade. But factor in, if your trade goes against you, how much am I going to put into it? Now, those are my general guidelines of what I put into. And those are not, etched in stone. They can vary from time to time, but typically that's what I do. One at a time, add on 3 times in one day. And if it doesn't go my way after 3 tries, I got to wait for the next day and then I'll get out, providing that, we still get some continuation to the top side or it's still feasible. What else you got, Catherine?
My last question was, I think you answered it already because about the channels. When you are readjusting a channel and you can't get 2 touches on the bottom or the top, you can use the center line as your touches.
Correct. Line up that center line with as many touches, and that will get you your target to the downside. If you have a channel that's already failed and you don't know where it's going to go to, because there's several charts that we've looked at that we can't find a bottom because it's still moving down or what have you. You can use the center line as a valid support area, and that'll widen your channel and that'll get you that target. Yes. And like I said, when I tried to activate it tonight for whatever reason, but typically it will let you adjust it. So what do we see on this chart right? This is a 3-minute SPY chart. Anybody see anything on this?
Cup and handle forming.
Cup and handle forming up. If we get a gap down, what are we looking for?
We're looking at 314.5.
Okay. Well, I mean, here's our cup and handle, because we got our down move, we got an up move, and we got our down move. We have a higher low, but we got a lower high, but we got a higher high close from the previous candle. So if we get our cup and handle, as long as we maintained a gap down of at least that bottom arrow there, we get that handle. Right here's our rim. After we get our rim, look for this target right here. Typically, cup and handles, after they break, the handle is going to be, or the rim is going to be retested. That's your entry for a calls play. Now, if we did a gap down, futures are down 31 points right now. They were up when we started. They were up 100. They gap down. Look for a double bottom for the W setup. Because cup and handles, if they don't confirm, you can always get a W. Otherwise, you get what's called a low, a lower high, a lower low. Because 3 ways charts will move. You get a down move, you get an up move. You're going to get a cup and handle because you get a pullback. Or you get that up move, you get a pullback for a W. Or you just get that. Sometimes you might get this down move and you get this, and then it's all consolidation or whatever. But typically, one of these 3 moves is what you're going to get. And if you trade those accordingly, sure. And if you wait for it, be patient. They'll form up. They will form up. Or if you jump into a trade, have that profit target. Take that profit when you see it, because it may run up and it may drop just as quick as they got you into it. Okay, other questions?
And when the cup and handle fires, it usually moves 50% of the length of the cup.
Correct.
Could you show that on the screen? Because maybe,
Yeah. For example, I mean, right. Let me get my tool, and then Daniel, I'll answer your question.
Oh, I'm sorry, Daniel. I didn't know.
No, that's all right. Let's still do this cup and handle, because that's a very good question. I mean, here's your cup and handle. Okay. Once you break this rim, typically you will get a 50% move from the cup height, which is the bottom of the cup to the rim. 50% of that is going to be your initial move up. It could be more, but typically it's at least 50%. Then you get your retest, and then it will shoot higher. And on that subsequent move is when you will get your entire cup height. So that's why, I tell people, don't worry if you miss a cup and handle break. If you miss a cup and handle break, it's going to get retested, and then you're going to be able to get more on that subsequent move.
Now you're not getting in until it actually retests.
Correct. Correct. Now, you could, depending on how much it's already broken, you could get on the rim break, but you've got to, again, don't think that it's going to go straight up because it is going to pull back, and especially with options. It might make that break.
Close above the rim though, right?
One more time.
Do you want to wait till the candle closes above the rim?
Well, if it closes above the rim, typically I'm already getting out because I'm already in. I'm in on the bottom of the handle or the bottom of the cup. I'm already in, so that's why I'm selling at this rim area. But if it breaks it, I tell people, don't worry about it. Let it go up, then let it come right back down. Now, if you have the trade, there's your rim, and you happen to get in, you got a candle right here, and you got in right there on that arrow. Nothing wrong with that. You just got to make sure you take your profit on that subsequent move because it is going to come back. And if you're playing options, what you paid for it right here, if you didn't take your profit when it went up that little move there, when it come back down to here, it's not going to be the exact same price. It's going to be worth a lot less. It'll be worth a lot less. So depending on how much time you have into the trade, if you got in here, did not sell up here, you need to add right here. You average down, and that's when you can make some more money too. So that's why I say each trade, based on when you get in, and you know your exit plan, is going to be different from trade to trade to trade. But patterns, I mean, if you're trading a cup and handle pattern, I always wait for that retest to get my entry once I have already sold it.
Once you sold. Okay.
Yeah, because what happens on a cup and handle, and this is why I sell at that rim. You've got your cup and handle. Well, you've got your cup and handle, and I'm selling. I mean, I'm getting in down here at the bottom or here. The reason I'm selling here and here is because this handle part, it may not break through that rim, and it comes on down. You got yourself an M. You got yourself an M. Now, if you get in here, you miss your exit here for whatever reason. If you have time on your side, if it's feasible, you don't average down just yet. You wait until it finds this double bottom, comes back down here. This center of this M will be retested. So when it comes down to this double bottom, it's going to bounce right back up to right there. But what happens with options, this is what happens. Time decay sets in, the value, it may not even be worth averaging down. And there's a lot of variables such as how much time to expiration? How much do you already have into the trade? Is it worth it? And just go ahead and write it off, be done with it, move on to the next trade. That's why don't go all in on options like that. Cup and handles turn into M's. W's turn into head and shoulders. So each pattern would typically turn into something else. Ascending triangles. You got an ascending triangle. That's also a cup and handle. If you have a cup and handle, you got an ascending triangle. So again, support, resistance. Buy on support, sell into resistance. Always. Always. Now, option or a common stock, yeah. If it fails a support, I just wait till the next support. You just buy more on support until eventually you've maxed out how much you want to put into a trade, and then you just have to wait for it to move. You just have to wait for it to move. Typically, stocks will go back to their previous high at some point. The question is, how long will it take? Well, I've been in Blackberry now for 16 months and I'm still waiting. But I'm still in it. I didn't stop out. Sam was in Roku for what, 4 months before it's starting to make a move. And you can see, you know, he's made 30 some trades here recently. Today, Roku did a very good job moving up what, $16, I think. $16. So, but let's go to Daniel's question. And that's a very good question. It has nothing to do with day trading, but it's a very good question. Fifth Third Bank. Let's go to the daily. We got a nice daily channel. We failed it. Okay, he sold the 18 put yesterday. Now the question is, what expiration did you sell? Tomorrow's expiration. Okay. When you roll a position, now when you sell to open a put, you initially collected a premium up front. And I'm going to say if you sold this yesterday, just based off of the price from yesterday, we closed at 18.14. Was that yesterday? Okay, we opened at 18. You probably collected, did you just sell one? Oh, you sold two? Now, I don't know when you did it. You sold, let's see, you sold it. Okay, you sold it yesterday. You probably got about a buck.
Cliff, can I ask a question?
Mm-hmm.
Why would you sell a put the same week on a Thursday?
Okay, because Fifth Third Bank only has monthlies.
Oh, it's monthly.
Yeah,
Okay.
it's monthlies. So it's going to expire next week. So, okay, you got 69.70 cents for each one. Okay, you can roll this out. The idea when you roll this out, because you've just obligated yourself to buy Fifth Third Bank at $18. And in my opinion, $18 is a very good price to buy Fifth Third Bank at. $14 is better, of course, because it's less than 18, but 18 is fair. 18 is fair. You got 69 cents. Your cost basis is only $17.31. The idea when you roll out a position is to get an additional credit. So you could roll this out to August the 21st. Now, I don't know. I don't have a position open on that. Exactly. Exactly. Now, but if you roll it out to August 21st, you're going to get an additional premium. How much you're going to get, it all depends. You might get anywhere from 25 to 50 cents, maybe more. When you receive that credit, you're going to reduce your cost basis. You get assigned 200 shares on the 17th. You're going to have a total of 500 shares. I don't know what your average would be at that point. But then if your average is, say, $17, and this thing's dropped down to $16.50 by then, you can turn around and you can start selling $17, $17.50, $18 calls against that. Now, when you sell calls against a position, you're capping your profit, of course, and you typically sell calls at a resistance point so you can get max premium. Now, as we found out today with AMD, resistance completely broke through 2 daily resistance, a weekly resistance, and a 60-minute resistance, all in one day. If you sell at the first resistance point, at that time, you're going to get max premium. You're going to get the most that they're going to give you. But once it breaks, the premium goes higher. You could have gotten more. So that's the question when selling covered calls. That's why when I sell covered calls, I will always sell a covered call higher than my average price. And typically, I like to sell them higher than the shares that I got assigned or that I purchased. Now, most of your platforms, they'll do first in, first out. So even though I've got some shares of AMD at $60, I've got a $55 average. I do know if I sell a $56 or a $57 call, the shares that's going to go out first, I'm going to make profit because I paid less than 56 and less than 57 for them. But we will do rollings. Frank and I, we sold a Boeing 280 put. We collected, what did we collect, $9,000?
Yeah, it was fine.
$9,000, and it expired in August. We rolled it to December and collected an additional $1,800. Granted, that's not a whole awful lot, but what that did for us, that gave us another 4 months for Boeing to go up to 280, and Boeing's going to have big news in October. They're supposed to be done with the recertification or something like that's going to happen with Boeing in October. So that may push Boeing up to 250, 260, 280. Right now it's at 170. As long as Boeing gets above basically 170, stays above 170. Actually, we've got 9, 10, 11. Let's call it 180. As long as we stay above 180 by December, we're either going to break even or have a little bit small profit. But if it makes a big move up to 250, 260, 240, we could buy that put back and profit $5,000, $6,000. But rolling is good to reduce your cost basis. Rolling is good to get you more time for it to make a move up. Rolling is good if you've made a mistake and you don't have the cash in your account to purchase. Just roll it out. Buy yourself more time. Get an extension, so to speak. But when you roll out, you have to do it for a credit and not a debit. If you roll a position for a debit, just take the position. Go ahead and take the assignment, because do not pay to get that extra time. Rolling always should be for a credit and credit only. So, and for you, and what I tell Sam, check your position. If you're thinking about rolling something, check your position every day. Yeah, basically, and your platform will do it for you, because basically what you're doing, you're buying to close the one that you have, and then you're selling to open the next one. But since you've already collected that premium initially, you know, they're not going to double dip you, so to speak. Give you, I mean, they are, but they're not. But you do have to buy to close, and then sell to open the next one. So if you got 69 cents, and right now, you know, they're at $1, I think. Let me look it up. Yeah, they're at $1. So you got to buy back for $1. Currently, next month's is $1.75 by $1.90. So if you sold it initially for, I'm going to round it, 70 cents, you got to buy it back for $1. That means you lost 30 cents. But in turn, you're rolling it out to August. You're selling it for $1.75. You're getting an additional 35 cents. So in that particular case, you're going to net an extra $5. No, 35. Because you got 70 to begin with. But as long as it's a credit for when you do it, you're not losing money. It's reducing your cost basis. And when you're trading, of course, anything to reduce your cost basis is what you want to do. Because what happens when you reduce your cost basis at the end of the year? Short answer. If you've reduced your cost basis on all your trades, guess what? At the end of the year, you're going to pay higher taxes.
I'm sorry, say that again.
If you reduce your cost basis on your trades, you're going to pay higher taxes, more in taxes. And that's what you want. Because if you're paying taxes, that means you're making money. So, but reduce your cost basis. That's what it's about. Now, again, I'll repeat this. When I reduce my cost basis through selling covered calls or puts, again, I do not factor that in on my price to sell at. For example, if I sell a Roku 140 put and I get assigned at 140, even though I collected $1,000 in premium, my cost basis is 130. When I go to sell that covered call, even though I could sell a 135 and make profit off of it, I'm selling at least a 141 or higher. So that $1,000 premium is pure premium, pure profit. I'll get premium when I sell the covered call plus the profit from the share. Now, some traders, they don't care about that. I had one tell me today, or I think it was today, I don't know. Can I sell a put at 140, turn right around and sell a 140 call? Sure can. If you get assigned at 140, you sell the 140 call? Sure. And at the same token, if you sell a 140 put, you're obligating yourself to buy those shares at 140. If you turn around and you sell a 140 call, you're obligating yourself to sell the shares at 140 anyways. So you could do those simultaneously. Even though the call is going to be naked, you've got the right to buy those at 140. So it's really not naked. So in that sense, you can capitalize on a 140 call because come expiration, it's either going to get assigned, called away, or whatever. And in that case, for example, if you sold a 140 call and you sold a 140 put for the same expiration, you're going to collect the put premium and you're going to collect the call premium. On expiration, if this thing closed right at 140 even, well, you got to buy the shares at 140. You got to sell them at 140. So you have 0 shares and you've got the premium on both sides. But let's say it closed at 139.
You're buying it.
You're buying it at 140 and you're going to keep it. You're going to keep it. And you're going to get to keep that premium from the call side as well. And you got the premium from the put side. That's a win-win situation right there. But I myself, I've made a couple of trades that way, but I typically don't do it that way. I'll wait until I actually have the shares before I sell the covered call. That's just me. But you could do that. You can sell a put, sell a call, same time. And your profit is basically the premium that you collect. For sure. Now, if it gets called away, let's say, okay, if you sold the call, because this is what might get you. Let's say you sold the 140 put, sold a 140 call, and it closes at 141. What's going to happen? You sold the put. You don't have the shares.
Right. You get the premium.
This thing closes at 141. Well, guess what? You got to sell the shares at 140. You got to go to buy those shares at 141 so you can turn around and sell them at 140.
Yeah, so you get the whole money.
So that's going to put you in the hole, but yet you've got your premium, and as long as you collected more on the premium side, you're okay. But what if this thing closes at 155? You sold a 140 call, collected $500. You're going in the hole. Because if you sold that call without the shares, because when you sell a call, you're obligating it to give up those shares. If you sell a put, you're obligating to buy those shares. But if it closes above 140, you don't have to buy those shares. Now, you could exercise, I guess, and again, take the shares at the 140, force them to sell them to you. But I've never been in that situation, so I don't know. Okay, who's got more questions? Anybody got a chart they want to look at?
Let's look at beyond.
Okay, let's look at Beyond. Here's Beyond Daily. We are hovering, and as you can see, let me get my intraday charts off of, or my intraday markings, because I was trading an intraday. Okay, here's our daily chart on Beyond. We got a big red candle. Typically, we've got 3 green inside that red. Typically, that fourth candle is going to be red, even though this first green candle is a white one. It's a green candle. 3 inside, now we got a red one. Tomorrow could very well be another down day. It did drop, retest the down channel. It did go back up above, because if you take a look at the intraday, the 15-minute, you can see we closed right on even the 60-minute. We're right on that daily support line. We've got a potential head and shoulder, cup and handle setting up on this 15-minute. The 60-minute, we got this M that we're retesting the center of. We've got a potential small cup and handle. This little doji is a reversal candle. It's an indecision candle, but it could be a reversal. We drop. This thing's going to come down to 132.50. We go positive. I'm looking for 145. But from the daily overall, we're making higher swing highs. We do have the inverted head and shoulders, or not the inverted, I'm sorry, a regular head and shoulders setting up. So our 120 target could very well be a reality, because we got our up move, down move, up move, down move, up move, consolidation. If we drop, we're going to 120. Head and shoulders are pretty bearish. The only thing that we've got going for us right now that's holding us up is this daily support line right here that we're on. And we've been on it 1, 2, 3, 4, 5, 6, 7 days.
Could you consider that consolidation now?
This is consolidation, yes.
Yeah.
This is consolidation. The longer it's in consolidation, the stronger the breakout or breakdown. We get a breakout, expect 155 to 160.
Okay.
A breakdown puts us down to 120, which is also the bottom of this daily channel. We fell the daily channel. We've got weekly support right here at 100. That still gives us swing high, swing low, swing high, swing low, off the weekly, higher highs, higher lows, potentially cup and handle. If you're like me and got shares and you got them at 140 or 145 or 150, it's not going to look pretty when it gets down to 120. It's going to look even worse when it comes down to 100. But over time, it goes right back up to 160, and you're going to sit pretty again. Just like Sam and his Roku. Again, he had shares 168. 168. He's sitting pretty right now because even though he wanted to stop out and take a $10,000 loss, I said, no, you're not, Sam. You can't. Now, a couple of weeks ago, we discussed and talked about Roku here a little bit. And I said, we've got ourselves a little inverted head and shoulders coming up. We're going to break it. And we're going to hit, at the time it was going to be 145. But I said, ultimately, we're going to 170 to 180. And by the end of the year, we could very well see the top of that channel, which is $200. $200 at the top of the weekly channel. But initially, I said it's 170 to 180 is where we're going to go. Now, we're not going to get there in one big swoop. We might get another up day, but we've got this down channel that we just broke out of to retest, and we've got the center of this weekly channel to retest. So our first retest is going to be that red diagonal as well as the purple center line. If you got shares, if you haven't sold calls against it, sell the calls against it. If they get called away, let them get called away. You just pick up some more shares. Or if it comes down here to this 135 level, retest, I'm willing to pay 150 for the shares because it's going to go from 150 to 180. That's a $30 move. I collect $1,500 up front on a premium, take the shares, still sell covered calls once I get them. Start selling those 160 calls, get $1,000, sell a 170. When it gets up to it, sell another $1,000. Because with Roku Premium, if you're looking at Roku Premium, next week's calls for a 150 is $700. A 155 is $500. You got shares at 140, sell a 155. That's some good premium. You sell them at the resistance points and you get a little bit more. Roku's been very good to Sam. Roku's been good to several people that's been trading Roku. It's been a little while, but it has paid off and it will pay off. Sam was down $10,000 in the common stock position, but through the covered calls, options, selling the puts, he's been able to move it up, step it up. So, and especially if you got 200, 300 shares, and if you're selling 3 contracts, taking $900 a contract, you're following a PO3. Look at that. You get 3 trades every week. So, but yeah. Roku did break out of the down channel. We're still in the weekly up channel. So I'm still expecting 200. But 170 is my initial target in the 170s. And I only say that because our high is 176.55. And plus we got this 10-year channel right here at 185 level. Now, the cup and handle that you see here on the daily chart going to get retested, and it lines up with the center of the weekly channel, which is 135. The actual rim of that cup and handle is this close, 137.50. So once it comes back down to the 137s, that's when you look at taking your positions, depending on which way you want to trade them. Okay, Daniel, you have a great weekend as well.
Night, Daniel.
Okay, other charts, other questions?
I'm gonna call
Futures-
it a night, Cliff.
I'm sorry?
I'm gonna call it a night.
All righty. Send me that recording if you don't mind so I can send it out.
I definitely will.
I appreciate it.